If you own XRP or any other cryptocurrency, you should pay attention to what Warren Buffett is doing right now. Warren Buffett may not like cryptocurrencies at all. In fact, he's spoken out against them. But that doesn't mean that crypto aren't a part of his investment ideas. Warren Buffett is doing something right now, like selling the most stocks and holding the most cash he's ever held in his life. He has very accurately forecast every single one of the big crashes that have happened in the stock market and the real estate market before, and he has made a lot of money from them. This doesn't mean that a crash will happen tomorrow, but it does provide us some very critical information about what this bull run will probably do. So, with that in mind, I'm going to show you guys this clip. Warren Buffett is leaving Berkshire Hathaway with the most cash it has ever had. $347 billion in cash. To put it in perspective, it's about the same as Colombia's whole GDP, and it's enough to provide each of the 260 million adults who live in the US right now $1,300. Buffett is leaving his job as CEO of Berkshire Hathaway, but the things he did before that were some of the most unique things he's ever done in his career. Buffett only opted to hoard a couple times throughout his life this much money. Today, his cash pile represents an amazing 30% of Berkshire Hathaway's total assets. This is the highest level ever recorded. Berkshire Hathaway had only exceeded previous all-time high records once before. During the financial crisis of 2008, I just want to briefly bring out one thing regarding this chart that Bravos published here, that before this time, you can see that he started to build up a lot of money in 2003 and 2004, and at the height of the crisis, he had more cash than ever before, and as everything started to fall apart, his cash and reserve fell down a lot, almost to an all-time low. And this illustrates how much money and assets Warren Buffett has access to, and how good he has been at buying and selling. Good times. This is clearly a yearly chart, so he's not always perfectly getting the top and bottom, but he's close enough. Because of that, his performances have been pretty crazy compared to the S&P, and I want to show you this because his acts are clear. Proof. Just before the world economy went bad, there were also big jumps to war at the end of 2021, just before the bear market of 2022, and in 2000, just before the dot-com bubble burst. Many people nickname Buffett the Oracle of Omaha because it seems like he has been able to predict and avoid some of the most difficult and terrible times in modern financial history. You can see this quite clearly in this chart that illustrates how well Berkshire Hathaway's stock does compared to the S&P 500 over time. If you look at the recession bars from the dot-com bubble and the 2008 financial crisis, you can see that Berkshire Hathaway did very well throughout both times of economic trouble. A lot of this good performance during these times can be explained by the fact that he had more cash than normal. So is history repeating itself today? Is Buffett's record cash accumulation today suggesting at another severe crisis ahead that's going to make his bet pay off and lead to another significant outperformance of Berkshire relative to the S&P 500? Buffett has remarked several times that this is not how he works, even if all of this makes it look like he knows something about the future of the economy. In fact, he has even said that being an economist is a useless job in general, at least when it comes to making money in the market. His philosophy is not to guess what will happen, but to put money into good enterprises at a fair price. And I believe that this is the next major lesson we can learn from this when we apply it to Bitcoin. This is where I got the notion to only put money into crypto companies who are truly doing something good for society and making life better, easier, and cheaper for people all around the world. Buffett has done so well because he looks at companies, their earnings, their global impact, how many people use their product, and whether or not it makes sense. Then he looks at the data, like the QE for example, and compares the quarterly earnings to the price per stock and does all those ratios. After that, he decides whether or not it's a good or bad deal on the actual company, and then he buys it. When there are big corrections, investors are usually quite scared and make quick decisions that are, to put it simply, foolish. That's why Warren is purchasing at those times. And when a lot of people are betting a lot of money on firms at prices that don't make sense, Warren is selling because he says, this doesn't make any sense. I think this is a bad deal. I won't buy anything right now. But if you want to buy my stock, go ahead and do it. That's why he has so much money. Warren can't just sell all of Berkshire Hathaway at once because it's so big. Instead, he'll sell a little at a time when the market is very speculative and buy a little at a time when the market is very undervalued. I also think the crypto market is pretty similar. There's no doubt that we are in a bull market right now. XRP is doing really well. I don't think we're anywhere near the top of this run for altcoins, but I do think Bitcoin is coming quite close. I don't think altcoins are close to their peak. I do think it's crucial to use the appropriate kinds of methods that have worked in every previous historical example, such with Berkshire Hathaway. If individuals don't take any profits along the way up, and then they miss the top and then they watch it go all the way back down to where it was before the bull cycle, which has occurred many times before in cryptocurrency, you're probably going to be kicking yourself in the rear end. And if you're purchasing at the top when people were going crazy and speculation was at an all-time high, you have a lot to lose in this situation too. I know a lot of you might want to argue that this time is different, but I've heard the same thing every time since 2017, 2021, and now 2025. People always say the same thing. This time is different. This time, it's mass adoption, and we'll never go back down to those prices again. It's never going to happen, and yes, a lot of things are different this time. And once again, I don't think we're anywhere near the top. But I'm just saying that Warren Buffett understands what he's doing, and that's why he's done so much better than the S&P 500. But there are also other crucial things to think about. Let's pay attention. And the truth is that a lot of this is happening right now. If he can't find good firms at a good price and would rather put more money into cash. Almost every historical measure shows that the stock market as a whole is excessively costly. The Buffett indicator, which is one of Buffett's preferred ways to measure the value of stocks, shows that the stock market is at one of the most expensive levels in history. This is a number that shows how much the entire market capitalization of U.S. equities is compared to U.S. GDP. In other words, it shows how over or undervalued the stock market is compared to the size of the real economy. That number is now 200%. This means that the stock market is worth twice as much as the whole U.S. economy. This is the highest level ever recorded. This chart shows us how far the Buffett indicator is from its normal trend at any particular time. And right now, it's around 2 standard deviations over its historical tendency. The last time the Buffett indicator changed this much was at the height of the dot-com bubble in 2000 and right before the recession in 1970. The stock market has been extraordinarily costly for the past few years, which is why Buffett hasn't been able to locate good places to put his money. Now, just to be clear, these valuations are not a way to tell when to buy or sell. In theory, valuations can stay high or low for a long time. But if you look at things over a long enough time frame, you'll discover that prices tend to go back to the average. And if you use them like Buffett does, that means you're buying stocks right now when businesses are cheap and have a lot of room to grow in value. And you're saving money at the proper times when businesses aren't attractive and have a lot of room to lose. For instance, buy in equities in the early 1980s or at the depths of the financial crisis in 2009 when they were historically low.